Looking at this, guys, that's your bullish pennant. And we're just bragging about Tibbs trade here. See the flagpole? When it's coming out of here, nice breakout. Now, tighten up your stop because it's going to go like this. It's going to go like that, okay? So tighten up your stop. I don't know how many contracts you have. You're a professional. You should know, right? I would probably drop into this, into a 5. Right now, it's still early in the day, 10-minute. And yeah, there's really no support there. So where do you put your stop? Intraday. I would probably keep it under the 20. Here you go. Looking at Molina. Nice breakout here. Look at that. Nice breakout. Not breakout, but look at the Heikin Ashi. It's still green. And I highly suggest, here's a lesson here, guys. You see these quick links? Make sure you have a star and candle in Heikin Ashi. Why? Because Heikin Ashi, when you get big moves like this, remember, you're not seeing the gaps. And when I see a lot of air between these moving averages right here, watch what happens. It might be a gap. And see the gap up there? On the regular candles, there's a gap. There's the candle. So do you leave your stop down here? Do you put it up here? And then, is it outside the Bollinger? I got a favorite saved right here because I took time to go in here and save all my favorite indicators. So I hope you did that too. But I also have Bollinger hidden over here. It's pushing that outside of the Bollinger. You see that band bending in? It's due to pull back at any time. Anytime. Now, the reason I'm stressing this is there's 3 kinds of people here, or 4 actually. 1, those that have a stop on the Heikin Ashi. 2, those that have a stop on the reg. 3, these people have a stop. No, they don't. These people have no stop. So which one are you? Maybe you're a combination of 1 and 2. Which one are you? If you're this one right here, guys, the education's not going to help, okay? The education's not going to help if you're not using stops or protective put. It's not going to help. You can spend more and more money and go to different websites and get different systems. Here's the thing. It's like, you got to use the education, right? You got to use it. So please be 1 or 2. So yeah, go back and forth, right here. Look at this. Boom. Tighten it up. Remember, your goal is to get your stop to break even right away. See how I put a star on it? You see that? When I star it, it puts a J right there. There's my market sector. So July 2nd, 15 stocks. When I click that, red is bear, green is bull. Here you go. 3 bears and about 12 bulls. Which ones do you like? Elan popped up again. Reg, BMY, Psych, CGGR, V2, PNR, Walgreens, Beam, WCN, HDB, Valley, Bears, QBTS, TEL, and Nvidia. Uh-oh. We don't want Nvidia to go down. Why is that, guys? Why? I'll show you in a second. Big influencer on the market. Big influencer. Okay. Nvidia moves the market kind of like the Feds do, right? So there's your fast 5 picks. I did that in under 5 minutes. Now I just have to whittle down what's my favorite 2 or 3. We're going to go to the fundamentals. And boy, do I got some good fundamental stocks for you guys. So like, for example, you see this big candle right here? Knowing how Heikin Ashi works, I knew it was a gapper. I knew it was a gapper. Like yesterday, I was telling you guys, I knew this was going to be a green candle because see how this is red right here? When you get a big red and then you get a doji behind it, guess what this doji looks like? Guess what that doji looks like? Do you know? It's a full green. So a full green candle after a big red one is a great swing low setup. And you won't even have to, I can see it right here. It's not a surprise. It's not a surprise here. And by the way, what's a good number of pullback? What's a good number of days of pullback? 1, 2, 3. What's the average number of pullback days? 3 to 5. What's the average number of days up? 4 to 7. So 3-day pullback, doji on a 10. Pretty cool, right? 3-day pullback, doji on a 10, failed. But your trigger's up here, who cares? So there you go. A lot of gems in there, guys. A company that has a dividend. This is their revenue, operating cash flow, $37 billion. Their capital expenditures, or whatever they're spending it on, property, plants, equipment, see it, is $17 billion. Subtract that from there, what do they have left? $20 billion. Are they going to have enough to pay their $11 billion in dividends? 20 is greater by far. In fact, they put another 4.5 to buy in their own shares. And they still have money left over after that. How much? Right there. Isn't that cool? So after their capital expenditures, after their dividend stuff, they still have money left. They're good. In fact, they might raise it because they raise it every year. They know how to manage their money. So based on a dividend, when a company drops down, is that an attractive dividend, yes or no? Is it better than your bank? Is it better than a 5-year CD? It's double the 10-year bond. Now, if I buy that on margin, and it's 2-to-1 margin, what am I getting a year? Is that good, yes or no? You guys get it, right? You guys get it. I mean, if I go buy this stock, Verizon, at $41.90, we'll call it 44, 42. That is what they're giving you right now, because you're going to get $2.81. See, that's the estimate, $2.81. They've already paid out $2.11 this year. $2.81. $2.81 divided into 42, I got 6.7%. So I don't know how they're getting that. But anyway, what if I buy it on margin? I'm only putting 2/100 into it. And if I'm getting 281, that's over 10%, guys. Way over 10. And every year they're adding more. So like if you bought it back in COVID even, it's gone up 40 cents. They add a dime. Look at, they add a dime every year to your dividend. So that's called your 5-year grower. See the growing rate, the CAGR, compounded annual growth, 9 years growth streak. So fundamentals, simply do this. Shareholder friendly, dividend good. Earnings, are they beating earnings? Are they profitable? It's a utility company, so I expect it to be slightly bullish to neutral. Yeah, it's bullish. Look at that. They have plenty of cash in the bank. It's not bullish, it's just good. It's just there, right? So when the companies dip, these are the kind of things Warren Buffett likes. Good companies that dip. They want to sell off. What's a famous saying from Warren Buffett? When everybody's having a good time and buying up stocks, that's when I sell. When there's panic in the streets, and his words are when it's blood in the streets. I don't know why he acts like it's a war, but basically a bear market. When there's panic and everybody's selling, that's when he buys. He buys on dips. That's an investor mentality, but he looks for good companies. So share earnings good, dividend good, valuations. Let's go look at it. The green line right here, it's going up. It's going up. See it? Price of sales, it's going up. And you can zoom in like this. See it? And that's a utility company, so it's going up. And see, these squares are behind it, so it's not bad. And it's slightly undervalued. Free cash flow, undervalued. The green line could be going up a little bit more. And there it is. Undervalued. How about AT&T? Green line going down. Done. Green line's going up on price to sales revenue, but I don't like this right here. And by the way, who's got a better cover call? Verizon. Cool? Happy 4th of July, guys. Freedom isn't free. Salute all those veterans and military people and those that served because we have this holiday. 3 days of it. 4th of July, 250-year anniversary, 1776. We still got it going. And because of our freedom, we get to do jobs like this. We get to have these kind of beautiful opportunities, and I get to enjoy Gino Live. I hope you did too, guys. Thank you very much. Have a great weekend. I can't wait to see you Monday. Monday, I might be starting a little bit earlier. Watch your email. I got an appointment early Monday. Let's see what happens. The market is closed tomorrow. Yeah, so, and be careful of IBD, the way they do those fundamentals. It's growth stocks only. It's not value. So thank you, guys. Stick with our fundamentals if you would. Stick with our fundamentals. You got it? Did you like the fundamental lesson? Yes or no? Did we put fun into fundamentals? Have a safe and sane firework weekend. Please don't blow off your fingers with the firecracker and don't lose your hearing. Okay? And let's not burn down the neighbor's house. Yeah, Tibbs. It's because they're in technology, big movers. They're a little volatile. And when the market's bearish, they underperform the market badly. Yeah, so in a bear market, people get wiped out in IBD. Believe me, I know. I've used to follow it. So stick with your fundamentalist here. Have a good one, guys. Thank you.